Alright, hi everyone. Welcome to today's live analysis session brought to you by IC Markets. I trust you've all had a great weekend, right? And let's get the new trading week underway. Right, okay, before we dive into the charts on TradingView, let's take a quick look at the disclaimer. Right, please take note that this is marketing communication and does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for the transactions in financial instruments. Also, take note of the risk warning that comes with trading forex and CFDs, as they carry a high level of risk to your capital, and you should only trade with money you can afford to lose. Right, my name is Ketan Rameshchandra, and this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we've been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Right, before we dive into the charts and trading view, let's take a quick look at what's on the economic calendar for this week. Right, it's a pretty heavy calendar as well. We've got another two central bank announcements, as well as GDP and inflation data news releases as well. Right, we've got the RBA, the Reserve Bank of Australia, coming up tomorrow on Tuesday, 24th of September, followed by the SNB or the Swiss National Bank. They're up on Thursday, 26th of September. And we also have the PCE price index from the US. This is the Federal Reserve's preferred gauge of inflation, and that's out on Friday. Good morning, Shal. Good to see you as well. Right, so here's the calendar for this week. As you can see, we've got flash composite PMI data out today as well for the Euro area, for Germany, for France, for the UK, as well as for the US, right? So the composite PMI consists of the manufacturing and services sectors. And of course, we've got the RBA releasing their cash rate announced statement tomorrow at 4:30 a.m. GMT, 24th of September, Tuesday, where they're expected to maintain the cash rate on hold once more at 4.35%. We also have Bank of Japan Governor Kazuo Ueda speaking. This is going to be pretty critical as well, because this follows the Bank of Japan's monetary policy announcement that was made last Friday as well. We could get further clues as to what this central bank is thinking with regards to future policy action. Then we've also got the RBA press conference on Tuesday. This is going to be important as well. This follows, of course, an hour after the statement is released. And we've also got inflation data out of Australia on Wednesday. And on Thursday, the Swiss National Bank drops its monetary policy statement at 7:30 a.m. GMT, where they're expected to cut rates once more. This would mark the third consecutive time that the S&P has cut rates. This would be another 25 basis point cut. We also have US GDP data out on Thursday at 12:30 p.m. GMT, as well as Chairman Jerome Powell speaking, and ECB President Christine Lagarde speaking at their respective events. And finally, we have the PCE price index out on Friday, 12:30 p.m. GMT time. All right, hi UK Gamer, good to see you as well. All right, just taking a slightly closer look at the RBA cash rate, we can see that the central bank has left the cash rate unchanged at 4.35% at the previous meeting. This marked the sixth straight meeting where they had kept rates on hold, and it looks like tomorrow is going to be meeting number 7, right? We're expected to see them hold rates once more, as they still remain worried that inflation in Australia still remains above the 2 to 3% target range, and they are vigilant to any upside inflation risk, right? So they're not committing to any premature rate cuts, right? They would really like to see inflation move significantly or move sustainably lower before making that first rate cut. So quite likely we are going to see the RBA keep rates on hold once more, which could function as a potential bullish catalyst for the Aussie. So take note, if the statement and the press conference by Governor Michelle Bullock communicates a very hawkish outlook, right, we can expect the Aussie to receive a strong tailwind, and it's quite likely to push higher following the statement release as well as during the press conference. Right, and then on Thursday, the S&B is looking very likely to make its third consecutive rate cut. Right, they're looking to reduce the policy rate by another 25 basis points to bring it down to to bring it down from 1.25% to 1%. Right, this is because inflationary pressures in Switzerland have decreased quite significantly, and they're expecting moderate GDP growth and looking at a slight rise in unemployment, right? So they're going to be cutting rates to stimulate the economy and to help prop up the labor market as well, right? So it's quite likely the S&P will move ahead with the third consecutive rate cut. And finally, on Friday, we have the PCE price index. Remember, this is the Federal Reserve's preferred gauge of inflation. Now, here we have the charts for monthly PCE. On the left, I have headline PCE, and on the right, I have the core PCE. Where we can see in the month of July, headline and core rose 0.2%, right? And the forecast for August points to another rise of 0.2% once more, right? So we can see growth or price increases sort of stabilizing at around the 0.2% region. Now, should we see these two indices match the forecast or perhaps come in even lower, right? That's quite likely going to cause or that will also be reflected in the annualized readings as well. We're likely to see further moderation to the downside for the annualized readings as well, right? So uh, headline PCE currently came in at 2.5% year over year in July, while the core reading came in at 2.6%, right? So if we do see the monthly readings match 0.2% or perhaps come in even slightly lower, that could likely show further dissipation of inflationary pressures in the US, which is then quite likely going to function as a bearish catalyst for the dollar. So take note that the dollar could see significant selling pressure on Friday. All right, okay, now let's move on over to the charts on TradingView and start the analysis on the dollar index. Right, so I'm on the daily time frame here, and we can see that the dollar index, if you actually look at it since if you look at it since the third week of August, right? Since the third week of August, this index has just ranged sideways between 100.60 on the lower bound and about 101.80 on the upper bound. So we're seeing sideways action that's been in place since the third week of August. So it's quite likely we're going to see this price action continue at least for the next couple of days, right? So we're expecting dollar index to rise, right? We've seen demand for the dollar pick up today, right? As markets reopen, we saw the dollar index rise from about 100.71 to as high as 101.24, right? So demand for the dollar does appear to have picked up quite strongly today, and we can expect the dollar index to rise up towards the pivot here. The pivot at 101.77, right, is a nice overlap resistance level, right? We saw this level previously functioning as support on 14th of December 2023, after which it proceeded to function as resistance on 3rd of September, as well as on the 12th of September. So this creates an overlap level, which is actually a nice resistance barrier. Right, so that's where the pivot has been identified. And we can also see the dollar index continues to trade underneath the bearish Ichimoku cloud, which highlights the bearish momentum, right? So, and with demand for the US dollar picking up, we can expect at least the dollar index to rise up close towards the pivot over the next couple of days. Now, looking slightly below, this level at 100.61 is a very strong multi-swing low support level, right? We see the first swing low taking place here on 28th of December 2023, another swing low taking place here on 27th of August, another nice rebound here on the 6th of September, and of course this period here from 17th of September till the 20th of September, we saw dollar index stabilize around this level for it to rebound higher today as well. So you can see this is a very significant support level for the dollar index at 100.61, and it has bounced off this level once more. Right, looking at resistance, right, looking at resistance, I've identified resistance at 102.56. This is a nice overlap level here. Right, previously this level functioned as resistance in the first couple of weeks of January of this year, after which it proceeded to function as a nice swing low support. Then this creates a nice overlap. Then it functioned as support as well on 5th of August and again on 14th of August as well. So we see a nice overlap level that has been identified as the first resistance, which is at 102.56. Right, and this overlap resistance level also has the presence of a Fibonacci retracement. We found this retracement by starting from here. This swing high on the 26th of June, ending with the swing low on the 18th of September. We can see that the trend line, the Fibonacci trend line, captures the market structure pretty well. And of course, we can see the 38.2% retracement aligned very well with the first resistance. Right, so since pivot has been identified as a strong resistance barrier, and we see demand for the dollar picking up. So if you have gone long on the dollar index today, right, at today's open, right, you've gone long, take note, identifying your take profit target at around this pivot level of 101.77 would be a suitable area to do so, right? Okay, so these are the key levels for the dollar index on the daily time frame. All right, hi XD. Right, yes, we can cover Aussie franc and Euro franc as well for sure. Let's just cover dollar index. We'll cover gold. Look at crude oil, and then we'll jump back into the franc related currencies that you're looking at. All right, great. All right, great to see the request come in, and also for anyone else, right? Do drop your requests in the chat box early so we have time to go through the analysis, right? Do not wait till the end to drop any requests in the chat box. Right, so we can see how dollar index has been trading as well, right? Demand for the dollar has picked up today, so we can probably expect gold prices to be coming under a little bit of pressure today as well. All right, hi morning, hi Costas, good to see you as well. Thanks for tuning in. Right, so looking at the dollar index, sorry, looking at gold, right? XAU USD is an instrument that tracks spot gold futures. Right, we can see here gold has made an intraday high today, a new previously. Oops, hang on. This is a little bit tricky. Got a lot of okay, wait. So previously, gold formed a new intraday high on Friday, 20th of September. That level was formed at $2,625.79 per ounce. But today we see a new intraday high being formed as well, right? This happened during the Asia session today, and this level sits at $2,631.34 per ounce. So new intraday high has been formed for gold today, right? So we can see gold is trading uh, close to this pivot level. We've identified this level at $2,639.50 as a pivot level. It's a strong it's a potential resistance barrier. For that, right, we can see gold has actually made very significant a move to the upside, and because of that, we don't have any other resistance levels to reference. So in such a scenario, we have to rely on Fibonacci projections and Fibonacci extensions to identify potential resistance barriers. And in this case for gold, we actually have to switch to the monthly time frame to identify the current resistance level. So the pivot at $2,639.50 is actually a resistance barrier that's identified by the 100% Fibonacci projection. Now this 100% Fibonacci projection was found by starting from here, point 1, this low of December 2015, going up to point 2, August of 2020, and ending at the lowest point here, point 3 on September 22. So you can see that the 100% projection has been used to identify a potential resistance barrier, which has been identified as the pivot. To identify the next resistance barrier beyond the pivot, we have to use another Fibonacci projection level, and this projection started from here, this low on August of 1999, going up to the second point, which is here on September of 2011, and coming down to the third point here, December of 2015. We can see that this 100% Fibonacci projection sits at $2,716.33. So that's how we've identified the current resistance barriers based on two Fibonacci projections. Remember, gold is trading close to its all-time high, right? We have no other levels to reference, right? There's no swing high resistance, pullback resistance, or overlaps that we can reference. So in such a scenario, we have to rely on Fibonacci tools such as projections and extensions. I've tried a couple of extensions, but they are of no use as well, right? Because all the extension levels has been exceeded. What is currently uh, what can currently be used are the Fibonacci projections, right? So take note, this is on the monthly time frame, right? We are seeing a really extended move for gold to the upside, right? And I had to rely on Fibonacci projections to help us identify the next potential resistance barriers. Right now, coming back to the daily time frame, taking a closer look here. Right, as I mentioned, gold has formed a new intraday high today at $2,631.34. This is where the resistance level sits, right? The pivot is actually a resistance barrier, and with demand for the US dollar picking up today, right, we can expect gold prices to come in under a little bit of pressure. Now, how far it pulls back, it's a question that's to be seen. However, like the first major support that I see for gold is coming in at around this 50% Fibonacci retracement here, right? There's a 50% retracement at 2,469 dollars, which is a nice overlap level. You can see previously this level function as resistance here. On 17th of July, resistance once more on the 2nd of August, and of course resistance again on 13th of August, after which it proceeded to function as support on 22nd of August, and also of course on the 3rd and 4th of September, thus creating a very nice overlap here. So right, the first support is an overlap level that has the presence of a 50% Fibonacci retracement. right? And if I look across this level here as well, right, previously this level at 2,526 was a pullback resistance level from 20th of August till the 11th of September, right? So what was previously a pullback support, pullback resistance level can now potentially function as support. So maybe this level can function as a pretty decent intermediate support for gold as well. And there might be a Fibonacci retracement that we could use. Actually, no, there's no retracement that aligns well with this pullback here, so that's fine. Let's just keep the 50%. So take note, there's an intermediate support level at $2,531.72 as well. Now we can also see gold stabilizing here last Wednesday and Thursday at around 2,556, right? So this region here could be a pretty decent opportunity to get to go long on gold once more. So if we do see this pullback take place, right, maybe there's a nice support area that's identified by this region, right, like an intermediate support area identified between $2,532 and $2,557. This is a region where we could potentially have a good opportunity to go long on gold once again. All right, so this, take note, these are the key levels for XAU USD. This is the instrument that tracks spot gold futures. All right, now let's take a look. All right, hi Ajay, good to see you as well. All right, Shal, yes, we can definitely take a look at dollar yen. Right, let's take a look at crude oil first, right? And then we'll move on over to the currencies. Right, so XTI USD is the instrument that tracks crude oil futures, right? The WTI crude oil futures. So looking at this chart here, we can see XTI USD is clearly trading in a downtrend, right? We see a series of lower highs and series of lower lows, but we also see, of course, strong retracements to the upside. Right, we see a nice retracement that started on 6th of August. Gold price WTI reversing from about $73.50, right, reversing as high as $80.40 on 13th of August, right? So a nice, I would say, almost 10% move in about 10 days or so, 10 trading days or so, or less than 10 trading days. Then again, we saw another strong retracement to the upside that started on 22nd of August at around $73 per barrel, ending on 26th of August, rising as high as $78 as well. Almost another, like I would say, 8% move as well, right? Maybe about 8% move in a matter of 3 to 4 days, right? So we are seeing strong counter trend rallies for XTI USD, and of course, we are currently in the midst of a current strong counter trend rally as well. We saw the XTI USD stabilize on Tuesday and Wednesday, 10th and 11th of September, at around $66.60 per barrel, right? And since then, it has climbed as high as $72, another strong 10% move in about a couple of, about 10 trading days or so. Now, XTI USD is trading close to a strong resistance barrier, right? Not only is this instrument trading underneath the bearish Ichimoku cloud, which highlights the current ongoing bearish momentum, it also continues to trade underneath this bearish, this descending trend line, and at the same time we are seeing it approach a very strong resistance area, right? This level at $73.14 is the pullback resistance level, right? This level previously functioned as a swing low support on 4th of June, another swing low support on the 6th of August, and of course another swing low again on the 22nd. So previously this was a very strong multi swing low support level which got broken on 3rd of September. So what was previously a strong support level can now potentially function as resistance. So the pivot at $73.14 is a strong pullback resistance that also has the presence of a 61.8% Fibonacci retracement. Now, so we found this retracement starting from here, this swing high on the 26th of August, going down to this swing low on the 10th of September. So we can see that a 61.8% Fibonacci retracement aligns pretty close to this region here. So we have a strong resistance zone over here that's identified by several factors. We have, of course, the descending trend line, the 61.8% Fibonacci retracement, and the pullback resistance, which is the pivot, and of course the Ichimoku cloud as well. Remember, when Ichimoku cloud is red in color, the cloud itself can function as an area of resistance. So quite likely we may have a potential bearish reversal opportunity for XTI USD. So if this commodity does rise up towards this resistance zone here that's close to the pivot, right, around the region of $73.14, we may have a potential bearish reversal opportunity on hand. So take note of that level, right? And of course, should price indeed reverse off the pivot and drop lower, right? I see a nice little support level here taking place at $70.16. This can be identified as an intermediate support level, which can be used in the identification of the first take profit target. And of course, should crude prices reverse strongly and drop even lower, we can then use the first support at $66.66 to identify the next potential take profit target. So take note, although XTI USD is trading in a strong downtrend, the counter trend rallies have been immense. Right? We have seen counter trend rallies as high as 10% previously, and between 8 and 10% over the last three occasions. Right, so very strong counter trend rallies. But take note, we may have a nice potential bearish reversal opportunity for XTI USD should it reach this pivot zone or this resistance zone at around $73.15. All right, so these are the key levels for XTI USD on the daily time frame. Right, now let's take a look at Aussie franc and Euro franc as well. Right, we've got a request by XD, and then we'll take a look at dollar yen. Right, so here's Australian dollar Swiss franc. Right, so we can see very significant swings taking place here. Right, there's a nice swing low taking place here on 10th of September. A nice swing high taking place here on 2nd of September, another swing high taking place here on 20th of August, and of course this swing low here, this massive swing low taking place on 5th and 6th of August. And of course on the resistance side a little bit further, another nice swing taking place here in mid-July, as well as in at the end of May. Right, so you can see significant swings which can be used to identify as potential support and resistance areas. So with that said, Aussie franc is rising, has risen quite strongly since 11th of September, right? So, and especially with the Swiss National Bank coming up on Thursday, if they do cut interest rates and we see a pretty dovish statement as well, that's likely going to cause the Swiss franc to weaken even further, and we may see Aussie franc rise higher. Remember, actually this is a very interesting currency pair to watch today because we've got two central bank announcements that relate directly to this currency pair, right? Remember, tomorrow on Tuesday, 24th of September, right, we've got the RBA releasing its monetary policy statement where they're likely to maintain the cash rate on hold. And if we do see a statement and press conference that conveys pretty hawkish communication, that's going to likely function as a strong tailwind for the Australian dollar. And then come Thursday, right, if the Swiss National Bank cuts rates as widely expected, the franc is going to see significant selling pressures as well. So this currency pair, Aussie franc, actually probably has a very good potential to rise even higher this week, right? Remember, we've got two central bank announcements that are going to directly affect this currency pair, and it does look like it's being set up. The central bank actions looks like it's going to be likely to function as a strong bullish catalyst for this currency pair, right? So now Aussie franc is approaching this level here. Actually, it's tested this level here at 58.09. Remember, this was a swing high resistance that occurred on 19th of August. It's already tested this level, so I'm going to identify this as the pivot for today, right? We can see most likely we may have a potential bullish breakout take place through the pivot level. Remember, RBA comes up on Tuesday, tomorrow, 23rd, 24th of September, and the S&P line takes center stage on Thursday, 26th of September, right? Both of which could cause the Aussie franc to climb even higher. So we may have a potential bullish breakout for this currency pair with the pivot identified at 58.09. Now, in terms of support, right, as I mentioned earlier, this was a nice swing low support that took place in the first week of September, right, at 56.916. We are going to identify this as the first support. Now, what about resistance? Right, we see a nice swing low taking place here on 17th of June. Right, this could be the first resistance barrier for Aussie franc at 58.69. So remember, what was previously a support level, this was a strong swing low support that took place on 17th of June, right, with price breaking underneath it. This previous swing low support can now potentially function as a pullback resistance. Now, we can also run a Fibonacci retracement on this downtrend here. We see a very nice downtrend starting from 11th of July going down to this swing low on the 5th of August. Let's pull up all the fibs. We can see quite clearly the Aussie franc has climbed above 23, 38, and 50%, but where it did run into resistance was at the 61.8% Fibonacci level, right? So this level function as a very strong resistance level area, and actually if you track it all the way back to here, right, you can see this is actually a very strong overlap level. So 58.13 previously functioned as a nice swing low on 19th of April, and then after it broke underneath this level, it proceeded to function as resistance on 30th of July, 19th and 20th of May, and as recently as this morning as well. So this is very clearly a significant overlap resistance level that has the presence of a 61.8% Fibonacci retracement. Right now, as I said, the first resistance is quite likely to come in at this pullback level here at 58.69. So should we see the Aussie franc break higher, you can use this first resistance as the first potential take profit target. And of course, if this currency pair continues to climb even higher, I see a nice another pullback resistance at around 59.60. Right, this was a mini swing resistance here that occurred on 12th of June, like a pullback resistance here on 12th of June, which lines up quite close to the 78.6% retracement. So this is the next retracement barrier, resistance barrier, which can be used as the second potential take profit target should we see, of course, Aussie franc continue to rise much higher. And of course, if we do see it break through first and second resistances, then the final barrier is going to be this multi-swing high resistance here at 60.86, right? This is a strong multi-swing high resistance that's been in place since 17th of May. So take note, we have events, right? We have central bank events that could very likely drive Aussie franc very higher. So I would say pay very close attention to this currency pair, because we are quite likely to benefit from this movements in this currency pair because of the respective central bank announcements, right? The RBA on Tuesday and the Swiss National Bank at SNB on Thursday, right? So let's get rid of all the other Fibonacci levels and keep 61 and 78.6%. So take note, should we see Aussie franc rise higher, especially if it makes a bullish breakout through the pivot, we can use this resistance levels as potential take profit targets. Right, so this is what I have for Aussie franc, and there's there's a request for Euro franc as well. So let's take a look at that. Right, so for Euro franc as well, right? With the Euro or with the SNB looking to cut on Thursday, the Euro franc could receive a nice boost as well. So this currency pair could potentially climb higher this week as well, especially in the latter half of this week. Right, so once again, we see nice support levels right around here, nice swing lows, swing highs as well. Another swing lows here and swing high as well, right? So remember, we're going to be using swings like these to identify potential support and resistance levels, which in turn then can be used as potential take profit targets, whether you go long or short. So now with dollar franc pulling back, or sorry, Euro franc pulling back, right? If it does continue to drop lower, right, I see a pretty decent level here, right? Support level here at around 93.24. This can be used as a potential pivot, right? And then of course with Euro franc making a nice swing low here on 5th of August, this is where I would identify the first support here. Right. Now remember, if we do see the S&B cut rates on Thursday, it's quite likely going to cause Euro franc to rise strongly. So we may see this currency pair move higher. And if that does occur, we can identify several resistance barriers as take profit targets. So I see the Euro franc running into resistance at around 94.90 last Friday. We can identify this as a intermediate resistance level, right? That can be used in the identification of the first take profit target. Then I see a nice swing high resistance here that occurred on 15th of August. This would be the first major resistance. That's at 95.72. This can be identified as the next potential take profit target. And of course, probably around here, there's a retracement to the upside, right? on 18-19 July as Euro Franc retraced a little bit higher. It stalled at around 96.88 before dropping once more. So this can be identified as the second resistance barrier, which of course would then be another potential take profit target. Now, with Euro Franc making this nice downtrend here, we can also draw a nice Fibonacci retracement, starting from this swing high on 15th of July, dropping to this swing low on the 5th of August. Right, let's pull up all the fibs. Okay, no, that's not necessary, because we can see quite clearly this currency pair has already surpassed 23, 38, and 50. Right, where it did stall was around the 61.8% retracement, and we see the 78.6% retracement sit underneath the second resistance here. Right, so take note, we've got a potential bullish catalyst for this currency pair on Thursday, right? So if the S&P does indeed cut rates and we see a pretty dovish statement, we are likely to see this currency pair, the Euro Franc, climb higher. If that were to occur, right, we can then identify potential take profit targets based on these resistance areas here, or resistance levels, and as intermediate resistance at 94.90. With the first resistance at 95.72, which is accompanied by the 61.8% Fibonacci retracement, and we have the second resistance at 96.88, which is also accompanied with a 78.6% retracement underneath it. Right, so these are the key levels for the Euro Franc for today. Right, and these levels could also, of course, be valid for till tomorrow and Wednesday as well, of course, as long as it doesn't break through these levels, right? Okay, next up, Shal, right, we had a request for dollar yen as well. Yep, so let's take a look at dollar yen, and then we can move on over to the indices. Right, so after last week's central bank announcement, right, the Bank of Japan released its monetary policy statement on Friday, 20th of September, right, where they kept rates on hold, and Governor Kazuo Ueda also communicated a pretty neutral message as well, right? He sort of soothed the markets by saying that current financial markets look relatively unstable, and that the Bank of Japan is not looking to make any further rate hikes just yet, right? So that sort of helped calm the markets, and also saw the yen lose strength as well, right? So if the Bank of Japan is not hiking rates, or is not looking to hike its rates in the near future, that's quite likely going to cause the Japanese yen to come under selling pressures. So that would in turn mean, of course, currency pairs like the dollar yen are likely to rise higher, right? So dollar yen dropped as low as 141.74 last Friday before hitting a high of 144.49, right? And we can see here it's stalled at this level once more today, right? It's currently testing a pivot level at 143.76. If you look at this pivot level here, it's a nice overlap resistance, right? We see it running the resistance here on 19th of December last year, finding support in the beginning of January, finding support once more in early August, support once again on 27th of August, and then running the resistance last Friday and today as well. So this creates a nice overlap resistance level that has been identified as the pivot, and we may see a potential bullish breakout take place for this currency pair, right? Demand for the dollar looks to have picked up today, and of course, if markets are expecting the Bank of Japan to be less aggressive with regards to future rate hikes, that could see the Japanese yen come under further pressure as well. So that means we may quite likely to see dollar yen be supported and make a potential bullish break through the pivot here at 143.76. Now, if this bullish breakout does occur, we can identify several profit targets as well, right? There's a swing high resistance here that occurred on 2nd of September at 146.90. We can identify this as the first potential take profit target should we see dollar yen rise higher. Then there's another nice swing high taking place here on 15th of August at 149.28. This will be the next swing high resistance that we can use. And of course, let's see if there's any other retracement levels. No, so just 50. And of course, we have this first resistance at 150.90. This is a nice overlap resistance that has the presence of a 50% Fibonacci retracement, right? And of course, very clearly, the first support for dollar yen is at 140.25. This is a multi-swing low support, right? We can see the first swing low taking place here at the end of December 2023, and we can see the second one taking place on 16th September as well. So this is a strong multi-swing low support level for the dollar yen at 140.25. Right, so these are the key levels here, right, for dollar yen. So should we see this bearish or this bullish breakout take place, we can then use the subsequent uh, resistance areas or levels as potential take profit targets. However, take note, should we see, because it is trading in a downtrend, right, we clearly see dollar yen in a very strong downtrend, a series of lower highs, series of lower lows, and of course we see the bearish Ichimoku cloud as well. Should we see dollar yen actually reverse and drop lower, right, we can then use the first support at 140.25 as a potential take profit target for any short dollar yen positions that you may have as well, right? Okay, right. All right, this question by XD, can you look at Australian inflation? All right, let's take a quick look at that. Let's see, looking at the calendar, Aussie inflation is set to be released on Wednesday, 1:30 a.m. GMT, right? So headline CPI is expected to moderate lower from 3.5% down to 2.8%, right? But you can still see that it's well above the RBA's target of 2 to 3%. Hence, they are very reluctant to move ahead with a premature rate cut, right? So that's why they've held rates at 4.35% for the last 6 meetings, and it's quite likely they're going to do the same tomorrow at 4:30 a.m. GMT as well. Right, right. Welcome, Shal. Right, so take note of that. So although inflation does look to be moderating lower in Australia based on this latest forecast, however, it's still well above their target of 2 to 3%. And remember, if this inflation data is coming out after the cash rate announcement, so very likely we're going to see them hold rates once more. All right, okay, let's see, we've covered that. Okay, I think we can move on over to the indices, right? Let's move on over to the indices. And also, just before that, in the meantime, I'm going to launch a poll as well. Truly appreciate it if you guys can give your feedback with regards to today's webinar. And of course, we'll continue the session with the indices. All right, switching back to charts. All right, now let's take a look at DE40, right? DE40 is the instrument that tracks the DAX futures, right? And we see the DAX making a new intraday high here at 19,049.50. This occurred on 19th of September, right? Right, okay, most welcome XDs. Right, so we can see that it has made a new intraday all-time high on 19th of September, and this level was at 19,049.50, right? And it has reversed off this level last Friday, and it looks to be the DAX. Well, remember, DE40 is the instrument that tracks the DAX futures. It has stabilized. It stabilized around 18,700 today, to rise as high as, let's see, how high did it go? To rise currently as high as 18,820. So this index could potentially rise up towards this pivot level once more, right? So take note. So if you have gone long on the DAX today, right, if once it had stabilized and it had gone long, and if you had gone long, we can use this pivot at 18,971.60 as a potential take profit target. If you look at it a little bit closer, you can see that this is a multi-swing high resistance, right? The first swing high resistance taking place on 2nd of September, and of course the next second swing high resistance taking place on the 19th of September, last Thursday. So this is a strong resistance barrier that's identified by a multi-swing high resistance, as well as the Fibonacci extension at 127%. So how did we find this extension level? Well, it was done by starting from here, this high on 31st of July, ending with the low here on 5th of August. We can see that 127 extension sits at 19,002, and the 161% extension sits at 19,541, right? So this is how we've used extension levels to help us identify potential resistance areas beyond the all-time high, right? And let's see, maybe we can run a Fibonacci projection as well. Let's try it out. So let's try it from here, 0.1 starting on 5th of August, going up to 0.2 on the 3rd of September, ending at 0.3 on the 10th of September. Key projection levels sit at 61, 78 and 100%, right? We can see 78.6% around 19,731. We can probably use the 61%, right? Let's just keep the 61%. I'll explain it in a little while. We're going to use this zone here that's bounded by the 61.8% Fibonacci projection and the Fibonacci extension at 161% to identify a strong resistance barrier, right? So between 19,400 and 19,540 would be another major resistance barrier here. So first of all, right, if you've gone long on the DEX this morning, right, identifying a potential take profit target at around the pivot level of 18,971 would be a suitable area to do so, right? And of course, if this index continues to climb even higher, right, then we would try and at least see maybe close to this resistance barrier at around 61.8% Fibonacci projection would be another potential area to identify the next take profit target. Now on the support side, right, there's a nice overlap support level here at around 18,544. We can see that this level previously functioned as resistance from 23rd of July till 22nd of August, after which it sort of consolidated around here, stabilizing around this level, right? So creating a nice overlap as well. And this overlap level also has the presence of a 61.8% Fibonacci retracement, right? We've started this retracement from this swing low on the 10th of September, going up to the intraday all-time high on 19th of September. We can see that the 61.8% retracement level aligns very well with the first support. And of course, the second support for this instrument would be this swing low here that took place on 9th and 10th of September at 18,247. All right, so these are the key levels for the DEX. All right, I'm just going to end the poll as well. Right, thanks everyone for giving your feedback as well. Truly appreciate it. And now let's take a look at US 500. Right, looking at US 500, US markets are looking very strong. Futures are looking very strong today. Right, this US 500 tracks the S&P 500 futures. It dropped as low as 5,685.80 today, but has reversed quite strongly and is testing this pivot level here. The pivot level is at 5,714. It's a level that's close to the intraday all-time high, right? The intraday all-time high for US 500 was formed last Thursday, 19th of September at 5,734.70. Right, so there's a strong resistance barrier here that also has the presence of two Fibonacci levels. We have a Fibonacci extension at 127% and a Fibonacci projection at 61.8%. Right, so this is a strong resistance barrier. So if we do see US equity markets push higher, right, we may have a potential bullish break through this level. And if that bullish break were to take place, we can then target the next resistance barrier as a potential take profit target. So the next resistance comes in at 5,831. This was found by the 78.6% projection and 161.8% extension. Right, these extension levels were found by running a retracement from here, 3rd of September down to this low here on the 6th of September, 127% extension, 161.8 extension. Now these projection levels were found by starting from here, 5th of August, going up to 0.2, 3rd of September, and ending at 0.3, which is on the 6th of September. So we can see the respective projection levels align very well with the respective extension levels. So this creates Fibonacci confluences. So Fibonacci confluence simply means when you have more than one Fibonacci level at a particular price point or at a particular price zone. So which is what we have here, two strong confluence areas which help us identify potential resistance barriers, right? Now, of course, if we do see US 500 fail around the pivot here, right? If we do see it fail around the pivot and we don't see the bullish breakout materialize, right? We may also see it pull back a little bit towards this intermediate support level here at around 5,624, right? We see the US 500 stabilizing around this level at 5,613 last Tuesday and Wednesday, right? So this may be a potential support area as well, like an intermediate support area. So if we do see US 500 reverse off the pivot and drop lower, we can then use this intermediate support as a potential take profit target for any short US 500 trades. But take note, if we do see the bullish breakout materialize, we would then be using the first resistance as a potential take profit target for the long trade. So take note, it's sort of in limbo here, right? This could go either way. So remember, it's just about preparing ourselves for what could possibly happen. So if we do see the bearish reversal take place, we can target a suitable take profit area at 5,613. And on the other hand, if we see a bullish breakout take place, we can then target a potential take profit level. We can then identify a potential take profit target at around the first resistance. All right. All right. Another question by Pip Tutor. Right. How often do I do the analysis? Right. Okay. We'll do it every day. Right. Basically, at the beginning of the week, we're going to be using the daily time frame, right, as what you see now. This would help us identify the key support and resistance levels and the pivot levels that usually would be valid for at least the first half of the week. And then on every subsequent day, I'll be doing the analysis on the 4-hour time frame, right? So on the 4-hour time frame, we'll be looking at like this and trying to identify the more not more, but we're looking to identify potential intermediate resistance levels as well, right? And then we'll be using this intermediate resistance and support levels on the 4-hour time frames as potential entry points and exit points as well, right? So I would say at the beginning of the week, we'll be using the daily time frame. And followed by analysis on the 4-hour time frame for each subsequent trading day. All right, Pip Tutor, I hope that answers your question. Because remember, right, all these resistance levels, pivot levels, support levels can be broken, right? Especially if you see large moves during certain days, right? You can see these levels get taken out. So then, of course, we would definitely need to reanalyze the charts and identify the more current resistance and support levels, right? So that's why I would say, as a good process, right, at the beginning of the week, right, start the analysis on the daily time frame, identify the major resistance, support, and pivot levels, and then you can also move on over to the 4-hour time frame for each subsequent day to identify the intermediate levels, and then plan your trades around those analysis as well, right? Remember, it's always good to overlay the 4-hour analysis with the daily analysis as well, right? So that we don't lose track of the larger picture, right? One of the key important things of starting the week on the daily time frame is also to give us the overall picture of how a particular instrument has been trading, right? Are we seeing a large are we seeing a strong uptrend move, strong downtrend, or are we just seeing sideways action as well, right? So it's very important to identify the current trend, and that can only be done on the higher time frames, and typically the daily time frame is more than sufficient to identify major trends. All right, okay, let's see. So we've covered US 500 as well, right? We've still got a little bit of time. Are there any other requests, right? Are there any other requests? If not, I can probably cover. Oh, let's cover the Aussie, right? I don't think did I cover Aussie? Right, okay, let's cover Aussie and dollar franc as well. Right, remember we've got RBA coming up tomorrow. We've got RBA coming up tomorrow. All right, hi Ajay. Okay, dollar CAD as well. Okay, all right, let's do dollar CAD first. Right, let's do dollar CAD first, and then we look at Aussie. Now, dollar CAD was falling sharply for most of August, right, dropping as low as 1.3437. It was stabilizing around this level to retrace a little bit higher, but it looks like it has run into resistance at the pivot, which is at 1.3614. This is a strong overlap resistance level, right? This level was previously support over here, and then resistance in recent days, right? So this is a strong overlap resistance where dollar CAD has failed every time so far, and it looks to be under pressure once more. So if dollar CAD continues to drop lower, right, we can identify potential take profit targets as well, right? So I see a pretty decent intermediate level here, intermediate support level at 1.3500, right? This can be used as a potential take profit target for any short dollar CAD trade. So if you see dollar CAD drop lower, you can identify your first potential take profit target at 1.3500. And of course, if this currency pair continues to drop lower, we can then identify another take profit target at this swing low, which is at 1.3435, right? So for now, dollar CAD looks to be heading lower, right? Looks to be heading lower, so you can use these intermediate and support level, first support levels as potential take profit targets. Right, on the resistance side, right, there's a nice overlap resistance at 1.3784. Right, we can see this currency pair running the resistance here on 30th of April, 11th of June, and finding support on 31st of July. So this creates a nice overlap level that has been used to identify the first resistance. Now, just underneath this first resistance, we also have a 61.8% Fibonacci retracement. Right, so this retracement was found by running a retracement from this swing high on the 5th of August, going down to the swing low on the 28th of August. We can see that 38 and 61% retracement levels align pretty close with the pivot and the first resistance respectively. And of course, we see this currency pair continuing to trade underneath the bearish Ichimoku cloud to highlight the current ongoing bearish momentum as well. Right, so the bias for dollar CAD seems to be to the downside, and should it continue to fall lower, we can then use these support levels, these respective support levels, as potential take profit targets. All right, now let's take a look at the Aussie. Right, remember we've got the RBA releasing its monetary policy statement tomorrow, and should we see another pause on rates, right? And also if you see the hawkish, we see a statement at press conference that's pretty hawkish, that's quite likely going to cause the Aussie to climb higher. But for today, right? For today, the Aussie looks to be restricted underneath the pivot, right? If you zoom out, this pivot is a strong swing high resistance that occurred on 28th of December 2023. So for today, the Aussie seems to be restricted underneath this pivot. But tomorrow, right, we may see a potential bullish breakout take place through this pivot here. So tomorrow, right, if the RBA does indeed hold rates once more and we see a pretty hawkish statement at press conference, we may have all the ingredients for the Aussie to break through the pivot and rise higher. And if that were to occur, right, if that does occur, we can then target the first resistance at 1692 as a potential take profit target, right? Take note, this resistance at 1692 is a multi-swing high resistance that was formed on 16th of June 2023, and then again in mid-July of 2023. So a very strong resistance barrier that's accompanied by a Fibonacci extension at 127%. So how do we find this extension? We did it by running a retracement from here, this swing high on the 11th of July, going down to this swing on the 5th of August. We can see that 137% extension level aligns close to a 61.8% Fibonacci projection as well. This projection was found from here, starting at 0.1, 5th of August, going up to 0.2 on the 29th of August, and ending at 0.3, which is the 11th of September. Right, so you can see a strong Fibonacci confluence over here as well. So take note, for today at least, the Aussie is quite likely to be capped or restricted underneath the pivot level here, which is a swing high resistance. However, we may have a potential scenario where the Aussie is going to be receiving strong tailwinds to make a bullish breakout above the pivot and potentially rise up towards the first resistance, right? So the first resistance at 1692 can be used as a potential take profit target. All right, and let's wrap things up with the dollar franc. Right, we got the dollar franc in play as well, with the Swiss National Bank making its monetary policy announcement on Thursday, 26th of September. Now, if you look at dollar franc since 26th of August, it's also traded sideways as well, right? It has found support at around 0.84 and running into resistance at around 0.8550, right? So it has been ranging between this level here, about 150 pip range, ranging between this level here since the 26th of August. Now, it's quite likely that this currency pair is going to range bound for the first half of the week, right? It's quite likely it's going to range bound within the first half of the week. But come Thursday, we may see the franc sell off quite sharply, and that could cause the dollar franc to make a potential bullish break through the pivot. For now, the pivot has been identified at 85.37, which is a resistance barrier here, right? It's running the resistance here on 3rd of September, 12th of September. That's accompanied by 50% retracement. So we have found this retracement by starting from here, this swing high on the 15th of August, going down to this low here on the 6th of September. We can see the 50% retracement aligned pretty close to this pivot level at 85.37. Right, so for now, at least for the first half of the week, I expect dollar franc to continue to range bound, but come Thursday, we could see a potential bullish break through the pivot. Right, of course, this pivot, if it's of course valid until Thursday, then yep, then we can expect a bullish breakout through this pivot here on that day. So for now, right, when we have identified a trading range like this, right, when it's sideways action, you can still have opportunities as well, right? Although price may not be in a strong downtrend or a strong counter trend rally, when price is ranging as such, we are also able to play the range as well, right? There's opportunities as well. So when price reverses off the lower bound at like 84.84 here, we have a potential opportunity to ride the bounce on the 9th of September. And then when price runs into resistance on the upper bound of the range, right, as what happened on 12th of September, we have an opportunity to ride a potential downward fall as well. So we can have a short opportunity on 13th as well, Friday the 13th, and riding it down close towards the first support to identify a potential profit target. So remember, even though price is trading sideways, right, if you identify the trend and you identify the major support and resistance areas, you can play the range as well and identify potential long and short opportunities, or appropriate long and short opportunities, right? So these are the key levels for dollar franc as of today, right? Maybe come Thursday, some of these levels might not be valid, right? So that's why we would be doing the analysis, continuing to do the analysis on a daily, on every subsequent trading day. But remember, we have a potential bullish catalyst for this currency pair on Thursday. All right. Okay, so that's all I've got for all of you. Right. Thanks for trading in. Thanks for tuning in to today's session. And also thanks for the feedback as well. Really appreciate that. And do look out for all upcoming webinars by IC Markets for the rest of the week. Right. We've got a combination of live analysis, which was today, and we've got educational topics coming up for the remainder of the week as well. All right. Thanks everyone once again. I wish you all the best in your trading journey, and do look out for the economic calendar for this week as well. Right, it's a pretty heavy calendar once more, with all these various central bank announcements, GDP and inflation data, as well as several central bank chiefs speaking as well. Right, we got Governor Ueda tomorrow, and we've also got Fed Chair Jerome Powell on Thursday, and ECB President Christine Lagarde as well. All right. With that, thanks everyone for tuning in. Right, and I wish you all the best in your trading journey. All right, take care. Have a great week, and I wish you all the best. All right, thanks everyone. Right, and I'll catch you all at the next webinar.